What's up, guys? It's your boy Henry. Welcome back for another market update. So we're going to start off with the 4-hour time frame, and we are just going to go over something real quick on the QQQ, which actually we probably can do the same exact thing on the SPY. Actually, no, we cannot. No, we cannot. SPY already had its trend break, whereas QQQ has not. So we're going to be using the patternsite.com to put a target on the board for this trendline break. In this way, we have another target to play. All right, because we already hit this target, so we can actually get rid of this bump and run target. And just so you guys know where the bump and run was, it was right here. Yeah, the bump and run was this formation right here. That's when your buy-in was, and you caught, if you bought the breakout, which that is what I plan on doing here. I plan on going short again on this breakout when we have this other breakout, but you would have caught a $10 move to the target of the bump and run. All right, so we're going to delete that because it's no longer useful. It already played out. We are also going to be getting rid of the golden pocket because I don't think that is too useful for us right now. But what we can do is we can put in a new golden pocket on our chart. Let's just do that, and let's use the daily time frame to do this. Best to do it that way. We can just let's see. I want to try and get the exact bottom, but it is okay if we miss it. So let's just draw this golden pocket onto our chart, which would be right there down to just about right there. It doesn't have to be exact, it just has to be the general area, but I do believe that is just about it. All right, and that is right around our gap fill. And I'm just saying, if we do break this trend line here, we are going to be going a lot lower than this golden pocket here. So it probably will get a bounce here, but we probably are going to be going lower, and that will be signaled by a trend line break. All right, so go over that on the 4-hour chart, and don't mind the daily time frame. It shows the trend line being all the way down here, and a break on that would be more like 296. Whereas if you come over here to the 4-hour chart, which this is where we're going to put the target on the board, we're going to be using the 4-hour time frame because that is where your trend line seems to be holding up here. So that is what we're going to be using, and it doesn't have to be exact, but it is going to be the best of our ability. But yeah, if we do hit that, our trend line, if we hit it tomorrow, our trend line is going to be hit at anywhere from 303 to, yeah, honestly, it's going to be hit at 303. So if we do break this tomorrow, we're gonna need to see a daily close under 303. But yeah, let's go over just how to measure this bad boy, which I already know how to measure it, but we're going to go over it. I read this before. This just so I can quickly go over this with you guys. And we have a log scale rule right here. We don't actually need log scale, and this is why. It doesn't really change anything. Like, it's literally like pretty much nothing, so it doesn't really matter. So we're gonna ignore that. But yeah, minor highs, spacing, and minor highs are literally just like, this is your minor high, this is your minor high, or minor low, major low, minor low, minor low. And we're probably going to be putting in, well, not probably, we definitely are going to be putting in another major low, which comes at the end of a move down, and we'll be coming at the reversal. But yeah, let's go over the measure rule. All right, so yeah, we gotta find it though. Is it just here? Oh, I guess it's just right here. Use the measure rule to predict how far price will tumble after a downward breakout or price pierce from the trend line. The figure to the right shows an upsloping trend line with the price breaking out downward at point B. If you'd like to use the classic measure rule, which we are, then from the breakout, find the prior minor low low trend line touch. I show as point A, measure the tallest distance between the 2 points, re A and B, measured vertically. In this case, that's the distance between from C and D. Multiply that distance by 63% because that's how often this method works. When a full height is used, project the result downward from the breakout price B, the point where the price pierces the trend line. So let's just pull up the calculator real quick, and we can quickly do this. So right here, this is A, and this is B. All right, so I'm just saying, guys, it's looking really rough. like that is huge. So that would mean this right here is going to be that's going to be what we're using. So that's $33. So I'm guessing we're going to have around a $20 move after this, and that's what we're going to be able to play, guys. So we're actually going to be playing, or at least I'm going to be playing SPY contracts for these, not the VIX. I'm still in a few of the VIX contracts, but I did take most of my profits. And this is kind of the reason, like, there's always moves to be playing, but you want to make sure there are actual moves to be playing. Like, you want to make sure you're not just trading to trade. All right, like, why risk it for the biscuit if my targets were already hit? There's no point. All right, and I mean, my VIX targets, yeah, those have not been hit. So like, a wiser thing that I could have done is I could have maybe bought in more date on the VIX calls, and then I could have played shorter dated SPY puts, and that would have allowed me to have like two separate moves going at once, but they're kind of the same move, but it allows me to have one longer term play going, and then I have the play that I can continuously adjust, which, I mean, I guess all trades you continuously adjust, so I guess it's not that. But yeah, let's continue with this. So 34 times 0.63 is $21. So we will round down because always being conservative is better. Let's assume we're breaking out here, and we're going down. It was 24, right? What is this? Calculator. It was 34 times 0.63. 21. All right, I'm glad I did that because I was thinking 24. So 21 would be just about actually at the bottom of the pocket. So we're going to make our target right about right here. All right, and we're going to put it to the nearest whole number. So 282 is our target. And guys, this is damn close to pretty much everything else we're betting that we're going to come down to. We're betting that we're going to be coming down to 287 right here because that is our gap fill. And on SPY, I'm sure we can, I mean, I believe the golden pocket is right at the gap fill. So I do, yeah, the golden pocket is literally right at the gap fill on SPY. So I'm not even, well, actually I do have it on the board, but we can delete that because no, we're not going to delete it. We're going to leave it up. Pardon me. I'm acting silly. It's Sunday. Market's not open, but that's okay. All right. So now that we went over the targets we had to put on the board, which on QQQ, just so we can say it out loud, is 282, and we can thicken that up. Our targets, we can make it 2, just so they are very clear where the targets on the board are. And just to be clear what I am doing with this target, all right, and just to be clear what the move is that we're catching with this target, you're buying on this trend line break. Like, it does not matter. You were taking the position on the trend line break. All right, that is the point of having patterns and using them. So and we drew this on the 4-hour chart, so we're going to be using a 4-hour candlestick. So if we get a 4-hour close underneath this trend line, as you have not this whole time, then yeah, that is our buy signal, and that's where we go short. And I do believe we're probably going to get that on Monday. But yeah, all right, and it doesn't matter if we go up a little bit. Okay, this is the target of the trend line break. If there's no change in it, no ifs, ands, buts. All right, like if you break it, it's now on the table. All right, and we're likely going to be going down to the target. It's like we used the likelihood of this pattern actually playing out, which is 63%. So it's not like we're just saying we're having the whole $34 move. No, we're having the $21 move down to over here, and that is with the 63% probability that this will play out, which is just makes it very likely that we are going to be hitting the target, is what I'm getting at. But yeah, we're catching a $20 move. That's $2,000. So if you are, we'll hop on over to Webull. So if you are over here, okay, and I believe, by the way, at the beginning of the video I said welcome back to another market update. I meant to say welcome back to another weekly update. All right, this is a weekly analysis video. Is not a just normal market update. All right, but we do have the target on the QQQ, and it is $20 from 303. So let's just see what $20 gets you when you're buying. You buy a decent amount of time. Okay, so you're getting September 30. So most likely this is what I'm going to be playing. I'm going to be playing puts with September 30 OPEX And I'm just seeing, like, if I were to buy in the money right now, how much am I getting to get to our target? I think we're getting like 200%. Yeah, because $20 is 2,000 bucks. But let's say you're playing the 300s, okay? Oh, those are 800 bucks though. See, I mean, these are pricey, but at the same time, let's see what they were if you're getting them on a bounce. But at the same time, we got to wait for the trend line break anyway, so it's not going to be like that. So let's say we're playing the 290s or 295s. No, let's say 290s. All right, 290s, that works. Do you have time? They're going to move well. They were playing the 290s, so you're buying them for 500 and yeah, we'll say 550. Okay, 550, and at the target's 282, so that puts us $8 in the money. How much is that? So $8 in the money, 307. 3 plus 5, 315. So how much is that? So it's 1,500 bucks. So yeah, you're getting just about a 200% gain if you're playing like this. All right, now here's the thing: if we do get the trend line break, and I'm like, I mean, I'm gonna be honest, guys, I'm pretty swift with watching the market, like on an intraday basis. All right, well, on the 15 and hourly chart, I kind of have a habit of killing it. So I'm gonna be watching pretty closely to watch for bearish divergences and just signals that we're going to be going down. So I likely, honestly, will be buying the top. All right. Now, on the other hand, I also am going to have Sebastian helping me as well. So that's something that I've advised everyone who comes to the channel to go check out. Okay, Sebastian's Twitter. All right. If you're interested, just ask me about it in the description, and I'll give you a link to his Twitter, so you guys can go over there. And if you want to sign up for his platinum subscription, just like I do, there you go, because then you get trade alerts. All right, now I'm pretty damn good at getting tops and bottoms. I've documented that very well on this channel here. Okay, that's literally the purpose of the channel, just to document my TA. And I have exact price targets that I continuously put out, such as the one we just put on the board for QQ that we are planning a trade out right now for. All right, but yeah, okay, so if you're getting the September 30th OPEX, the 290 puts, and they run $8 into the money, and let's say 2 weeks go, no, not two, yeah, I guess, let's say how many days is that? So 33 days. So let's, yeah, 2 weeks goes by. All right, so exactly 2 weeks goes by, and now let's say you're in the money, $8, so 315. So now it's 1239. So now you're looking at like 130% gain. So this goes along with what I was just saying. I'm going to probably be playing a shorter expiration. I'm probably going to get like a weekly or a 2-week contract. So I'm probably going to be playing something like this. Because, like, I mean, guys, I'm catching these moves as they happen. So I got that price target on the board. So I probably, and I'm not a cheapskate. I'm not a cheapskate or cheap steak. Which one is it? I'm not sure. If you want to help me out, let me know in the comments. So use that phrase in the future in the proper manner. But yeah, okay, so I mean, I'm not gonna cheap out on my contracts here, so I'm gonna buy something that's pretty damn close to money. I would probably be going with the 303s, because, or I mean, we don't have the 303, so I probably would go with either the 302s or the 304s. And since you're actually, it's $200 in between these contracts that you're getting intrinsic value worth. But there's only an $80 difference here, so that's something to note. Or no, there's a $70 difference here, so that is something to note. And you're getting more, I mean, in my opinion, you're getting more value by going with 304s than 302s. So there's no point in like cheaping out on these guys. All right, like it's valuable if you're, even if you're going to play shorter dated contracts, it's valuable to try and get as close to the money as possible. Just so you do that. And this does happen to be right where a trend line is going to be breaking at 303 to 304. So we'll go with 304s. Let's say they're 600 bucks. Okay, so now let's say we go to 290. All right, so now we're at 290, and we are, what is that, $13 in the month? No, $14 in the money. All right, so $14 in the money. Let's say a week goes by. So now from these contracts right here, the 15-day contract, September 12th. Let's say we got 9 days left in the contracts. Okay, we got 9 days left, so a little more than a week. And now it's at 290. All right, so now we are the $14 in the money. All right, so that would be 307 plus 3 is 310 plus 11, 321 if my math is correct there. Okay, so 321. So yeah, I mean, your gains are actually looking pretty damn similar now that I'm thinking about it. So, I mean, I might even go with the, well, no, your gains actually looking way better here. You're getting close to that 200%. But either way, I mean, the indices, if you want to be safe with your contracts, you're going to have to sacrifice some of the gains. All right. Even though we're catching, like, that's a sick, nasty move you'd be catching. Yeah, I mean, it's still going to take some time. But now let's say you get down to our target, which is going to be so 304 minus 282. Okay, so that's a $22 move. So now let's say not a week goes by, but let's say you run right up to the end of the contracts. Right, you got 5 days, and you're 22 fucking dollars into the money. Now this is more realistic. I think this is going to happen pretty quick. I think like a 15 to 20 day contract, I think, can cover this move once trend line breaks. Which, yeah, then you're sitting on, let's say now you're at the 330 contracts. Okay, so 330 puts. What are these? Okay, so 330. They're $2,200 fucking dollars. Okay, so now you're sitting on a 400 to 500% gain. That's not bad. Okay, that's not bad. Well, 300 to 400% gain. So that's not bad. All right, not bad at all. All right, it's double what you'd be getting with the 2-week contracts, and just getting to 290. So that's what you're sacrificing by not cutting there at the 290 mark. But again, it's going to be way better than getting the 30-day contract, because I mean, they're just expensive. That's where you got to sacrifice. So, I mean, but personally, I'm just going over this just so you guys know what I'm going to be doing. All right. And that's exactly what it is. Okay. So that's how I'm going to be playing this move. I'm going to be entering on the 4-hour close under this. All right. And you guys, I mean, any returning viewers, okay, anybody who is already a part of the Simple Stocks trading squad team, we don't really like there's some people on YouTube that, no, there's like the IPO attack club, like Teddy Zane and stuff like that, and like they think they can pump things. In reality, they can't pump things. They just get in on Catalyst, and there's that. But I mean, I saw Teddy Zane go after Ape and AMC. If you really thought his people were going to move that, you really thought like 1,000 to 1,500 Patreons were going to move a $5 billion company, why would that make sense? It doesn't make sense. So yeah, I mean, that went sideways for them. Maybe they're going to be right and they caught the bottom. I don't know. I don't really care. But yeah, so I mean, we're not a trading community, but we all are going to be making money together at the end of the day. And I mean, at the end of the day, we're going to be here in a year from now, and yeah, we're all going to still be here because we're making money doing what we're in the group for, you know. But yeah, okay, so moving on, we're going to go on to the daily time frame on everything. Okay, we're going to talk about old Bitcoin over here, and we're going to get into VIXy, because Miss VIXy popped off, and that was the main play that we were playing on the channel, which is pretty cool. Which we're actually, yeah, we're going to start off with the VIX, okay? And we're just going to clean up this chart after we talk about a few things. So we said right here, so this was the bottom of the cycle brackets on the VIX, which was pretty cool because this was also the Jackson Hole date, which was a clear catalyst date. So it was telling us, hey, probably VIX is probably going to be going crazy here, and we're probably, like, we already went over this once on the channel. But yeah, if you buy at the bottom of the cycle brackets, which I'm not going to put up on this video. All right, I will put it up in between this video and the next video, so they will be there on QQQ and VIX for the next video and moving forward, so we have them. But yeah, theoretically, if you buy at the bottom of the cycle brackets on anything, you are going to be making money if you sell at the top of the cycle brackets. Right, VIX's top of the cycle brackets is probably somewhere over here. So it's probably going to be going into September. We're going to see a spike on the VIX. And then we're probably going to see it cool off. And then, I mean, I think September and October are going to be bloody months. But yeah. All right. So now that we are up here, so we are finding resistance right here in this this zone right here that we got right here. And it's not really too important. I mean, technically you could make this a zone and you actually broke out. And if this was the case, we could delete that, which we are going to keep that deleted. We're going to say you technically broke out of there. Because, I mean, QQ looks pretty damn ugly. Like, you either get the bounce on this trend line or you don't, and it's $3, and any 4-hour close under there is really going to signify to traders to jump on this thing. They're going to be like, hey, bearish pressure is on the run. Like, it is here, it's coming. or not. It's not coming, it's here. Like hey, we're going down, we're going timber. And I mean, a lot of people probably are using these methods to trace these trend lines and put these targets on the board. And that's why technical analysis works. It's just a bunch of people and a bunch of computers using the same exact formulas and methods to measure things and to trade. All right. And that's why TA moves markets. All right. That's why the charts predict the news. Like that's literally what happens. Like Federal Powell does not control anything. All right. But he has to pretend he does control everything. Like the federal funds rates follows the I think it's the 2-year. All right. So whatever everyone's inflation's expectations are, that's what the federal fund rate has to fucking fall. And I mean, that's just how it's been. So, and you guys can pull up a chart of those two and you guys can see for yourself how that works. All right. Because it is pretty cool. All right. But yeah, all right, going back to the VIX on the daily time frame. All right. You don't have a divergence here, but I just want to point out that you are in the overbought region now. All right, on stochastic and the CCI, and that is going to lead eventually to a top. All right, but I want to point out that you have done this before when you had, like, we had a crazy 17% day here. All right, when was the last time you had a day like this? It was, no, I guess it's not that. I guess it would be similar to this, right? I mean, I guess it would be something like this, and the next day after that, it was like 14%. My point is, like, a big day on the VIX, like, this is a big day, all right? This is a big-ass candle. SPY got a big, like, we're going to look at DIA. DIA got a big-ass bearish engulfing candles, whereas the others just failed to technically make the bearish engulfing candle. But just look at this. Like, this is absolutely crazy, right? Like, DIA really done. Oh, holy shit! Look at it. Done came down and bounced exactly, or it closed exactly on its previous gap fill right there. But yeah, DIA actually also has this gap fill right here. That's a target for DIA. Yeah, that's actually the only target we're going to be putting on the board for DIA. We can quickly go over this right here, which is a trend line break. Put it on the 4-hour chart. Right there. It was so strong they gapped right through it, all right? Gapped right through it. So this is how we would measure it here. So right here, $9.60 would be like a $6 move, and you already hit your target technically here. Oh, you hit it way back here. All right, yeah, DIA doesn't look to be nearly as profitable as trading this trendline break on the QQQ, which I'm so excited to trade this. This is another way we can capture this big ass move down and multiply our money again before the next move up. All right, like I'm hyped, guys. So should you be? Okay, that's the point of these weekly analysis. We plan what we're doing for the following weeks. All right, that is the point. It is in detail. So, I am going to. No, we're not going to cover that. We're going to strictly cover the TA until the very end of the video. Then we're going to go over the U.S. economic calendar for the week and point out just any key dates that could be a thing that could provide a catalyst. All right. But yeah, you're in the overbought territory on the VIX. I am going to be expecting a pullback, but I do think you are probably, now that you broke over this 200 MA as well, all right, you're probably going to be coming up to either finding resistance in this zone, which is pretty close to the target, or you're going to be hitting our target. All right, it's one or the other, but that is likely going to be the case. Now, I do want to also point out on SPY and QQQ, we are in the oversold territory here, but I want to point this out, okay? And this is what I'm going to be looking for. I've been vocal about this on the channel. What do I look for finding tops and bottoms? And what have we been able to find? One top, one bottom, and now two top. And we're going to be we're going to have a fourth case of this when we find the next bottom. What have we found these with on the channel? Divergences on the weekly time frame, the daily time frame, and the hourly time frame. That's literally what we've been using. If you want to go deep in that, you can use the 15-minute time frame. But honestly, like, I mean, I'll be watching that, but I don't recommend you guys don't have to do that. It's not going to make too much of a difference in the end. The 15-minute time frame, the hourly time frame, that could make a difference. It's 4 times the 15-minute time frame. You're losing 4x the entry there. All right, so like a lot can happen. Like, what if those contracts go up 50%, 100% in that hour? All right, so like that's the point of watching the smaller time frames. That's what we're going to be looking for. But yeah, I want to point out that you made your low here on this day, and you made your high, your higher high here on the CCI. So you finished your bullish divergence, your signal here. You finished it on the day you made your lower low. So, I mean, even though the CCI is already in the oversold region, we can come down and we could do something like this. We can come down, maybe do that. Maybe you do that, and then you do that, and it's a higher high, and then you come back up. And that puts us all the way back over here. So, like, I'm just pointing out that, like, a lot of time can pass in between here and there by the time we get that buy signal. Like just look at this. Or like, what if we have another day like this? Like, this is a minus 4% day. Let's say we have another 4% day that brings us, I mean, that actually brings us down further than our trend line here if we are on the hourly time frame. That brings us into the golden pocket, which is pretty cool. But yeah, I'm just saying there's plenty of time for us to go down. I think this is just going to be around 10%. Yeah, 8% here. There's plenty of time for that to happen. All right, we have let's just see how many trading days in between there. We have 4 trading sessions in between these 2 days, and I'm not saying it has to happen like this at all. I'm just saying I do think it's going to be something quick like this. But at the same time, the weekly time frame is up here, so we could have something like this mess where we have these violent bounces, but in the end, like, it's not going to be something like here where we have a complete trend change. All right, but like, again, keep in mind, if we don't break this low here, we have a complete trend change on our hands. As long as you come back up and then you break this high, boom, like it. So you're gonna have to have this happen. Okay, so you got to come down, you got to at least bounce here at the double bottom here, form that. You got to break this, and this X marks the spot. That is when, holy shit, like, wow, you have a trend change. And there's probably a target we could find on the patternsite.com for a trend change such as what we just pointed out here. There's probably a whole ass page for that, so I'll be looking for that as well. But yeah, guys, all right, the weekly time frame does suggest that, like, hey, I mean, you could have something like this going on where you keep going up for quite some time and you stay up in this weekly time frame for quite some time, or stay up here in the overbought region on the weekly time frame for quite some time, I should say. Or you could do what I think is more likely, and you come back down. Okay, and let me just see, was this a bullish divergence? Yeah, so we had a double bullish divergence on the weekly time frame going on. I probably pointed that out in my memory shot, but I mean, I am always up to date on the market. So even if the memory shot, I'm still seeing my charts every single day. So I mean, it's not a day where I'm not thinking about the markets. But yeah, I think it's more likely that you have an exaggerated sell-off here. And I mean, just look, guys, okay? Our QQQ trendline break, doesn't that give us a lower low? No, it does not give us a lower low. It does not. But let's say you don't do that, okay? Let's say you just do the Bravo method and you literally just measure it like this. All right, and then you do this. Now look at the low. Your low is like right here at this double bottom. So I'm just saying technicals are suggesting that you are going to be not breaking that. But I personally do think you are going to be breaking that. Well, I think there's a good shot. But at the same time, like, I'm conflicted because I think there's a good shot that both things happens. But at the same time, like, I'm the type of person that I don't care. Like, I literally don't care. So that's why I'm okay with being conflicted on these. Like, I don't care if we make the higher high. I don't care if we make the lower, or the higher low. I don't care if we make the lower low. I'm going to trade it the same exact way as I would in any other circumstance. Like, it's going to be the same for me. It's going to be the same for everyone here on this channel. So don't be worried, guys. Don't even be worried thinking about it. It's just not important. All right. What's important is that we have our targets on the board to trade, because, like, once you have your breakout on these targets, they're likely to hit. That is the point of the patternsite.com. And yeah, so now that we did have our Jackson Hole thing that did mark a turning point on the market, we said that that was going to act as a bearish catalyst, but we normally have some sort of Powell pump. So it's either going to be we're pumping into it and we're dumping on, like, when Powell speaks, or we're going to dump going into it and then we're pumping once Powell speaks. I call it the Powell pump. That does look to be what we got here, and then you actually had a just massive sell-off because he sounded hawkish, and we warned for days before, 2 or 3 whole ass videos before that happened. We were warning that it was likely going to be that Powell is going to come out being the bear that he has to be, unless he wants to not do anything for a whole ass month. Like, that was, like, You can do it on the 26th, or you can now wait till the 20th. And that's like a lot of days right there. All right. That's a lot of time for inflation to get even worse than it already is, and for the wealth effect to take place. And I mean, like, it's one thing to not do something, but it's a whole nother thing to let it get like a lot worse, and you knowing it's going to get worse and letting that happen. And that's what I was pointing out. Like, he can, like, midterms or not, it does not matter. Like, he had to do something, and it's only going to be worse if he doesn't do something. So now we're going to go over Bitcoin. Okay, because we went over our expectations on the weekly time frame, the daily time frame. We went over our target that we put on the board on the 4-hour time frame. And yeah, okay, we don't have any divergences that have formed on the indices, but let's see what happened on the VIX. We did have this bullish divergence right here that we pointed out. Actually, did we point out? Did we? I know we pointed out down here, and I was thinking down here was over here. I know we pointed out this one right here because we have it marked here on a chart. But I don't know if I call this one out, but this is what I'm saying, guys. You have your fucking divergences. They allow you to get the exact bottoms on pretty much all things. And, yeah, the hourly time frame has been treating me so damn well that I highly recommend everyone use it. Like, just fucking do it. Okay. Do exactly what you see in these videos because it works. And I'm not a god. Okay. I'm not a god. No one's a god. No one is mastered the market. No one knows everything about the market. But I'm just saying, guys, what we've been doing here on the fucking channel has been working, okay? And I'm just a guy who has, like, lost time and time again, okay? And my whole methodology this whole time has been like, hey, it's only a matter of time until you get good because, like, hey, 10,000 hours equals mastery of something, all right? So what if I just have 1,000 fucking mistakes that I lose money on? Mastery, okay? I like... It doesn't matter if I don't care if I stumble across something that's going to win first or if I start learning what doesn't work first. I didn't care. All right. And now I'm at the point where I have learned both of those things. And that is literally all I use in my TA in the videos. What works, and I avoid and I call out what doesn't work. All right. And these divergences on the hourly time frame, they work. And once you spot them on the daily time frame, that's when you can start looking on the hourly time frame. All right. When there's reason to start looking for something, that's when you want to look for the divergences. The reason I would have been looking here is I would have been looking for the gap fill. We were getting very close to the gap fill. We came a whole, let's see. Okay. We came to within 2% of filling our gap, which I'm kind of tight that we didn't fill the gap because, like, that would have been like the most perfect entry. But I'm also glad that I did re-enter. Pretty much, like I mentioned in my last video, that I re-entered most of it before the gap fill because it just started looking bearish as hell on the markets. All right, and like this is what we're playing. I wasn't missing our move. All right, and luckily things worked out. Okay, but like I said, I did take most of the profits because that's what I believe a good trader does. And look at here's proof that you can continuously do this and you're not gonna miss out. Okay, that's why FOMO should not be a thing. We are just about to re-enter another trade. We're going to enter another bearish trade on the markets. All right, using QQQ this time. All right, so I'm just saying it doesn't have to be like, oh, if I take the profits early, it's at the targets, it's going to be that I'm missing out. No, you're not going to be missing out. We're literally going to re-enter a trade. All right, and now we get to do so while VIX is going to be at elevated levels. I wouldn't be comfortable playing VIX at elevated levels, but if we have something on QQQ that is indicating that we're going to be going to a certain price much lower, yeah, there's a reason to be bearish. All right, that is a reason. That's the point. Technicals exist. All right, but yeah, looking at Bitcoin, okay, and we pointed out last time that we could pretty much just take this, okay, so we could take this move right here, and it would most likely be leading to that move right there. All right, and that is how you play pennants on Bolkowski's website. I would call this a bear flag. We do have targets on the board for a bear flag, and our target for the bid, this bear flag, is this whole zone right here. This whole, what is this? We could point out right there, 16,000 to 17.5. That's our target zone for this bear flag right here. All right, this was a mini bear flag right here. But yeah, okay. So like as you see, like we're coming down here, but in between there, we formed this mini bear flag right here. All right, and this bear flag, the downfall of that started at the breakout of that pennant, not the pennant, the rising wedge there. So we apply right there, and look at that. We're coming right down to our target right there, which this is the target for our, this is the final target for our rising wedge here. So I mean, again guys, like we're just nailing targets here on this channel, and like I'm just mind blown. Okay, like so should you guys be. Like this is crazy. We're just continuously nailing targets. It's been like over 2 months now, and we really have not failed with these targets. We keep nailing them. All right, and like at first when I started doing these, I was like, oh, no one's gonna believe this. No one's gonna believe like these crazy things I'm saying are like gonna be on the table, that they're actually, there's a likelihood of them happening. But now, like, no, the TA has lived, and it's not me like emotionally coming up with these theories that are gonna happen. No, it's me saying, like, literally saying into the microphone what's going to be happening based off, like, probability wise, based off these charts. All right, but now at this point the TA speaks for itself, and I don't have any of those doubts anymore. Like I have complete conviction that, hey, the TA, like I'm not gonna say 100% of the time, I'm gonna say 9 out of 10 times the TA will guide us towards the desired result. Okay, and the 1/10, that's where the big picture point of view comes in. And by the way guys, I'm just gonna point out right now on the daily time frame, we do have a bullish divergence carving out on Bitcoin. I'm glad this happened right on the day that we are have this weekly analysis going. Maybe we're going to be seeing a bounce. Maybe this is indicative of we're going to be seeing a bounce on the QQ at that trend line instead of us breaking it, because we are right here, and we could also be bouncing here on the 100 or the 200 MA like we did here on the hourly time frame over here. All right, I want to point out how this is important on all time frames. The MAs are very important. All right, and it's strictly because of what I said earlier in the video. TA only matters because so many people are watching for it and using the same methods and rules to find these target prices. All right, and that's why we got this bounce here. That's why you flipped it. That's why you had you got rejected here off it. You came down, you got support over here. So look at that. I mean, you had this thing right here, and this was actually a pattern we had on the board over here, and we had an upward target on that. So that was pretty cool. But yeah, like, look, you came up to it and you got rejected. You found support on your ascending support here, which was the bottom of your pennant here, or whatever you want to call this, your ascending triangle. And then you broke and you retested it too. You retested your 200 MA, and then you finally went on an absolute monstrous move. So who says we don't break this here and then come and retest it? And that would mean we're coming back to retest the trend line as well. And most likely that 200 MA is going to be right there. We're going to continue down, and then maybe we find support here in this golden pocket, or maybe we move down, and us breaking like the golden pocket. Now, I don't use Fibonacci levels a lot, but I did notice that the golden pockets, they work wonders. All right, like charts seem to respect golden pockets. All right, so that's what I'm going to be using when it comes to the Fibonacci retracements. But I want to point out that if you do break through this golden pocket, and that's why I'm pointing out that I don't use them, but I'm guessing this is pretty bearish. All right, this is probably a bearish signal for most people. If you break the Fibonacci level right there, where you usually should be rejecting off of and continuing whichever trend, directional trend you're going in, if you break that, it's probably going to be signaling that you're going to be going lower. So we got to watch out for that. If you come down to this target, you break the golden pocket. All right, so because of that, maybe that's signaling that you were going to be going lower. You're probably going to be like going lower than this previous move. That's, in my mind, that's what the golden pocket is. That's what it recommends, or not recommends. That is, like, in my mind, that is exactly what the golden pocket represents. That's the right term for it. My apologies for that one. And I say that because, look, the golden pocket is literally just a retracement of the previous move. So if the market is going to respect that move, and it's going to try and switch it and make that move the bottom move, then it's not going to be breaking the retracement of that move. So if you were to do that instead of rejecting off of it and coming up, let's say you don't do that and you come lower than it, maybe now it's signaling, okay, the market was not respecting this move right here as the bottom move. It was not, because that's all the golden pocket is like I said, that's all it represents, is the market respecting that previous move. All right, so if it's not going to respect that, it's gonna like punch it in the face, and it's gonna shove marshmallows in here. I don't know. Okay, it's gonna disrespect it, is what I'm getting at. I don't know how marshmallows in someone's ear. I guess that is definitely disrespectful, but I don't think that'll ever happen to anybody. Maybe it will. I don't know. But yeah, guys, I think Bitcoin's going a lot lower. I think we're going to be continuing that. But again, keep in mind, we do have that bullish divergence. And if we come onto the hourly time frame, I would not be surprised to see bullish divergences starting to carve out. But it does not look like we do have one. We technically do have one here and here, but that also could be, yeah, that's probably the one we're seeing on the daily time frame anyway. But yeah, I mean, technically speaking, this is a bullish divergence, because you are going like that. But I'm going to be looking for a smaller one. Now, I'm not going to be going long on MAR or anything, because I do think we are going to be, I think, quantitative tightening. I've been vocal about this over the past, like, 2 weeks, we'll say. Quantitative tightening is going to be a thing, and it's going to be doubling, and it's starting in September, and we're fucked. Okay, well, it's not starting, but it's doubling. Okay, so that's just double the bearish pressure on the market. I think that's going to that suggests that we're probably going to be breaking these lows down here, and there are a lot of other things that are suggesting that we're going to be breaking these lows, like this target being underneath the golden pocket, like we just talked about. All right, and on top of that, we do have the weekly time frame being all the way up there, so that gives, like, for it to get back down here, you're probably going to have a few cycles on the daily time frame. And if you're making lower lows on the cycles on these daily time frames, like if you're doing that and you're like, it's not making lower lows on here on the CCI, but it is for this. All right. Oh, I definitely drew that way wrong. All right, so you come down, make your high, but it's a lower high. You come down, you make a lower high again, and then eventually you're going to be making your higher high. You're gonna have it like that. It's not gonna come back up here. That's how you look for these. That's how you look for your divergences on the CCI. It can't come back up here and reset. It's got to stay up here. So now we're looking for something like that, and that is going to be, I'm gonna go make the lower low. It's gonna be the higher high, and that's how we're gonna find the exact bottom on the everything. Okay, on the indices, on Bitcoin, on everything. All right, and that's how we're gonna find the top on the VIX. And using those same methods, we're going to be spotting a top on VIX, and if we find a top on VIX, we likely have a bottom on the market. So then we have to look for signals of the bottom on the market. And once we have two signals, just like we had down here at the bottom for the VIX, okay, and just like we had here at the top for the market, as well as what we had for the bottom of the market and the top of the VIX over here. All right, we just need two signals that are signaling that, hey, the big picture is going to be happening. Okay, if two signals on the things that move opposing to each other are happening, that are signaling the same thing, we're gonna hop on it. Okay, that means you have a very strong likelihood that outcome, the desirable outcome, is going to be taking place. All right. Okay, so the only thing we really have to talk about now is the monthly time frame, which, I mean, there's nothing really new other than you have your stochastic ready to cross down, and you have your RSI here is crossing down at the 50 mark. Now, we have came down here in 08. We came down here on the RSI, the relative strength index, came down here into the 30 range, okay, or under this 30 line. We have not gotten down there ever since then. All right, so I do think we're not having, like, I think we're having a great reset, but people think the great reset is this thing where the US dollar is going to, like, lose pretty much everything. All right, the US is going to lose everything. I don't think it's going to happen. I don't think we're taking away fiat currency. I don't think we're going back to the gold standard. No, but I do think we're going to have a great reset, which is exactly what we see here. Okay. And I think, honestly, I think in the end, I think our RSI, like, it doesn't even matter if we come up, and it doesn't matter. Maybe we make that. Maybe you make your higher high here or something, and then boom, you have that, and that's a big ass signal. That would be a huge signal that we would guaranteed have to play. But yeah, I think it doesn't even matter if you come up here in the RSI. I think eventually you are going to be coming down here. Because if you touched here in 08, I think you're guaranteed going to touch here now. I think this is like the everything bubble that's terrible. I think everything that 08 was, I think this is like more than that. That's a personal opinion. You don't have to think the same as me. I advise thinking for yourself. Okay. But yeah, if you're thinking logically by my standards and what I think is logically, then you also think that we're in like a great reset kind of thing where we're going to have something worse than 2008, worse than the dot-com bubble. It's going to be worse. All right. So even if we do have this prolonged period, maybe it takes years. Okay. Maybe we come down, make the lower low, then we come back up here, we push the all-time highs, and then we do that. Eventually, I still believe we're going to be having a massive cool off, and I think your RSI is going to be coming down here. And that's ultimately going to signal a bottom. We had that in 08. I think that if we got down here on the RSI, I think that would be a very strong indicator that we're at a bottom. All right, and it has to be on that monthly time frame. All right, guys. So with that being said, I'm going to catch you guys in the next video. Peace.